The broadcast is now starting. All attendees are in listen-only mode.
A very good afternoon, everyone. Welcome to today's webinar, Australian Auditing Standard on Quality Management ASQM1 by Manoj Abhichandani. We're still having a lot of people join us for this webinar, so I would request you all to wait for another couple minutes so that we can have everyone in before we begin this webinar. Thank you for your patience. All right, welcome everyone. Welcome to today's webinar on Australian Auditing Standard ASQM1 by Manoj Abhichandani. Before we begin, there are a few housekeeping rules that we would like to go over. A copy of this presentation and other handouts is in your handouts section. You can download them and go on through the webinar with us. If for any reason you get dropped out of this webinar, you can join through this mobile number shown on your screen. Dial the mobile number, put in the access code and the audio pin, and you can then join the webinar from your mobile device. Any questions that you might have during the webinar, you can put in the questions section, and we can then address them at the end of the webinar. Now, before we go any forward, can we have someone from the audience confirm if I am audible and you have heard all the instructions that I have just given out? If anybody can just type a simple yes in the questions. Oh, perfect. Thanks, Michelle. All right. Manoj Abhichandani is our speaker today, and he has worked in the SMSF space since 1988 and has seen changes in the SMSF space from the earlier days to $1 trillion retirement pool. Initially, he worked as an accountant for 7 years with 2 CA firms in Sydney in the SMSF division, and then in his own CPA firm for 19 years as an advisor to 600 SMSFs on strategic issues. Today, he works as a product manager for trustdeed.com.au, where they support more than 10% of all SMSFs created in Australia. Welcome, Manoj. Stage is all yours.
Thank you, Weber. First of all, I would like to apologize. We had a situation on Tuesday, and I think the API with GoToWebinars was not working properly, or it just finished the webinar at started the webinar at 12:30, whereas it was supposed to start at 2:30. I think the issue is it's a American software and there was a timing issue. I don't know exactly what happened, but it's good that we are here and we are talking about the new requirement on the self-managed super fund auditing standards, which has been made compulsory from 1st of July 2024. And those of you who are using a templated or auditing, the audit report which the tax office provides, you need to download the new version, which tells you that a SQM1 must be used for each and every auditor signing off the new audit report. Now, today we are going to talk about what is ASQM. It's what is the objective, of having this, the purpose, the requirements, and what's in the minds of the regulator, so that we as auditors and accountants are aware of the requirements, of the new requirements. Basically, they want, just an overview, they want each and every audit firm to design and implement and operate a system of quality management, because they have seen that all auditors are not the same. They don't have one system which they follow. So they have given us some pointers. There are 8 different categories which I'm going to talk about that each and every auditor must follow, and their systems must be according to the default, minimum to the default objective and the requirements. And I'm going to talk about each one of them. Now, I have copied this from the new audit report, and if you look at the the audit report, it now points. It was optional till now, but now it points to the ASQM. Now, I don't know. Many of you have probably not read the audit report, because these days we just digitally sign them. But the new audit report now says that I have complied with and applied the auditing standard ASQM. So this could be a little bit scary for some of you, because if you don't have a policy document, then you could not have applied it because you don't have the policy document. So it's very important that every audit firm has a policy document for their quality management in their own firm, and you must have that documented, because if the ATO comes knocking at the door, the first question they're going to ask you is, can we have your policy document? And you must have that ready as soon as possible. I would suggest before you audit the first fund from 1st of July. So make sure you have that ready. Now, um, uh, there has been some new guidelines on it also from the tax office. I'll just bring that out for you, but you should refer to the tax office page. This was last updated on the 3rd of July, and you will see that they have given us indications on how Part A has to be audited and what things we need to do, and how we must audit if there are any discrepancies in the financial statements. The tax office has always been um, chasing those auditors who do not document an audit plan. So if you read the first pointers very carefully, make sure that you do follow the minimum expectations from the tax office that you must prepare and document the audit plan in writing. And then you must identify the nature and timing and the how you are going to follow your audit procedures. And if you were present in my previous presentation, we were talking about how we can identify how we are supposed to collect the audit evidence and how we are supposed to identify if there is a material misstatement in any of those assertions made by the trustees of the fund. And foremost, it's very important that all the evidence which you gather should be appropriate and they should be sufficient. That means the quality and the quantity of those evidences must be enough for you to pass judgment on the financial statements. It's on the website, so I'm sure you will be able to pick it up. Now, the risk assessment process, it's a three-step process, which is in the auditing standard. And I added the auditing standard also on the handout area. Please make sure that you download the latest compiled version, which is in December 2023. When I was reading it some 6 months back, I found it to be very curvy. It's a very dry and boring document because it has many areas where it repeats itself and it tries to reiterate the main items again and again quite a few times. So it's very boring to read the document. But then I would straight away jump to the paragraphs at the back, the explanatory, instead of what the provisions are, and then try to read them from there on, because the explanatory paragraphs are a little bit more detailed and they give you some indication of what the new system is. I'm talking about page 28 onwards. So just, you can skip the front portion if you like, and then get to the meat of the conversation. Now, as far as the standard is, it talks about that you must establish some of the quality objectives. And now you must be thinking, I'm auditing, what are my quality objectives? The quality objectives could be, let's say you have to audit an existence of assets or liabilities. So let's say if there are any shares, so you must have an objective that this is what I want to do, and you must have a policy on how you will check the shares, like you will check the HIN numbers, you will go to the share registry, and then you have to identify and assess any risks, that is, that what can happen, that the staff member may not do this, may not do, check to see the completeness of any transactions, or may not check whether there is an asset which has been recorded properly. So you can say, whether the ownership was checked properly or not, whether the the rights and the obligations of the superfund assets or entitlements were checked or not, whether the valuation or the accuracy of the data was recorded or not, whether the classification was done or not, whether it is a fixed property or the depreciation has been claimed property or not, properly or not. And then the risks could be many. I mean, you need to check in your report, you need to identify on how you're going to check the calculation, because there are various types of contributions. For example, some are taxable or some are not tax-free, and what is the method of you will check whether the tax calculated in the financial statements. And please, I mean, I'm aware that there are accounting softwares which offer access to the auditor. You please don't trust the software calculation, because I have seen many a times that the software can actually calculate incorrectly. I'm not defaming or trying to say that you should not trust them to the extent. But if I am auditing a fund, I will check each and every item of income and see what items are for incurred, for any deductions which are claimed, and whether the imputation credit. And because you see, it's not only the software which could be wrong, it could be the user, because maybe they have not implemented the imputation credits properly, or whether if there's a capital gain tax, they have not brought forward the losses in previous years. And I noticed that, in certain cases, some share trading losses are claimed against normal contribution income. There are lots of accountants who actually don't know that the share trading is always on the capital account and not on the revenue account, and any losses must be carried forward. So as far as I'm concerned, if I see a fund, I will always check the tax, whether it has been done properly or not. And I will not look at the figures which are in the system, but I will identify the income and try to have a separate spreadsheet. That is in my quality risk statement. And then I have a method of checking whether the staff has done it correctly or not, because I will go through that calculation and then compare it with the financial statements. And if there is any discrepancies, I could be looking at it in a more detailed manner. That means that I have to design and implement a response. So the response could be that it is incorrect, or if certain methods have not been used correctly, I have documented my conclusion and my opinion on the funds set of accounts, and I have made comments in my working papers. And my comments should be as good, so that if another auditor is looking at it or ATO is looking at it, he can or they can actually review my comments to see whether they can understand that I have done a proper job on the audit, and whether the opinion I have reached is correct or not. And at the end of the day, it is the audit report which is a conclusive proof that, and that is my opinion on whether the financial statements are correct or not. Now, I don't see the reasons why you should be worried, because if you are following a proper system, all you need to do is you need to document your system, and you should identify, you should have like a risk assessment method. So like where the red flags will come up. If this is not done properly, there's a red flag. And if there's a red flag, how am I going to address it? What are my responses towards those? So those policies and procedure statements should be available to you. And if they are not available to you, then there is a problem, because you are supposed to follow the auditing standard and you're not following the auditing standard. And if you don't follow the auditing standards, then obviously you could be in a problem with the tax office. So the point I'm trying to make out here is that the only change from now on, from 1st of July onwards, is that you must have that policy document which will give you the system on how you should audit the fund. Earlier on, you have a program, an audit program, that's fine. You have a checklist on our system, that is fine. But now onwards, you will have a proper policy statement on how you will be checking each and every item, and including, let's say, cryptocurrency. What would be your methods? What would be your quality assurance on what is expected out of you for each and every type of asset or type of expense. Now, this is your responsibility, because when you are being engaged as a partner, you are supposed to follow those steps, and you must make sure that those documents are strictly followed. The policy document is strictly followed by all your staff members as well. Now, this will extinguish your liability as an auditor to comply with the auditing standards. And as a principal of the firm, basically the responsibility is yours, that you should have a full understanding of this requirement, that you have to document it and you must apply it in your audit firm. Now, when you're preparing your quality management system, you should use your professional judgment, because each and every quality statement um, could be very different. And when it was initially introduced about a year back, there were many consultants who went out there because auditors themselves did not know on how to prepare this document. So make sure that you don't use anybody else's policy document. You must prepare your own policy document. Now, each policy document will be very different, because the nature and circumstances of each firm is different. You could be a part of a franchise, you could be a sole operator, there could be partners in your firm, and there could be different methods you use. The other day, I was told that an accountant sent to the wrong auditor the Dropbox link, and inside the Dropbox link there was a lot of information about many other funds which the auditor was not auditing. So under these circumstances, you may not have been engaged for those assignments. So what is your policy? So what should you be doing? Will you be deleting that email from the inbox, and will you be going to the delete box and deleting it from there as well? Is your policy to also inform the accountant that he has sent you the wrong information? So you need to have the responses ready, and you must follow that policy document to the extent that you remain uh, a complying audit firm. Now, the ultimate responsibility will always stay with the managing partner. So if you are the CEO of your firm, it is for you to develop this policy document. It is for you to decide so that the other team members can follow. Now, when you design this document, it's a very detailed document, and it should address not one, but many different components which are in the ASQM. And there are certain default clauses which you must have. But then these 8 components must be included. For example, what is your risk on each and every item? So one firm may consider title searches are not important every year, but the other firm will say that I must do a title search myself and not accept a title search provided by the accountant or the trustee. So you have to develop your own assurance program on what is risk for you and what is not risk for you. And uh, like I said, the leadership of the firm, the owners of the firm, the principal of the firm have to decide. And they have to also verify the APES 110. And there could be many staff members working for you. I mean, how would you know that staff member is not related to the trustee of the fund. So you need to get a declaration for each from each and every staff member that he is not related, or he's not independent, for example, from each and every audit. Now, when you accept a new client, the engagement letter should also be very different and unique in the sense that you should enter you should ensure that you let the accountant and the trustee know. I mean, in practical hindsight, not many trustees are going to read it, and you may think that this will make your engagement letter a bit longer, but you have to be very clear in your statements in your engagement letter that you would be following your quality management system, and you have certain protocols which you must follow. Now, when you get into the actual auditing process, you must specify to the accountant and to the trustee that how you will be collecting the evidence. You want them to upload it on your accounting software, or whether you have your own system, whether you are accepting emails, and whether you are accepting drop boxes or other forms of methods. And then how would you be going through those documents, whether those would be appropriate, what is the level of your satisfaction for each and every item, the ones which we discussed, like imputation credits. You want the dividend statements, and you're not happy with the statement provided by, for example, the accounting software, or let's say ComSec statement. You want the actual dividend statements to come to you, and you will verify, obviously on test basis, through that company's website, whether that imputation credit is available to the fund which you're auditing. Now, the owners should also look at all the resources. Now, the resources, I mean, whether people would be working from home, whether the internet of the staff who are working from home are not compromised, and whether they are independent. We discussed that. And what about the technology, as a resource, whether you will be using a software or an audit software to check through the audit evidence which will be provided to you. So you need to document that this is what I will be doing, and this is what I expect, and you will be relaying that through your engagement letters to your client. Now, there could be a lot of internal communication. How will that be handled? So you need to document that as well, that if there is any breach identified by any of the staff members. So you could have juniors working, you could have supervisors working. So you need to have a policy document on how the juniors will communicate with the seniors, and how the seniors will communicate with the principal. It's quite possible that you could be the sole practitioner, but even then you must document on how you will communicate any breach with an external party. At the moment, you may say that, oh, I will write an email. That is fine, but as long as it is documented that if there is any breach found, let's say on Part A, if the financial statements is wrong, or if the tax return is wrong, or something is wrong, you need to document on how you will communicate that to the accountant. That is what the quality management system would ask you to do. So you need to document that to have it on paper. Now, monitoring and remediation is quite important, because no system is foolproof. You should always make sure that it is working. Now, as far as the quality objectives are concerned, there are certain default quality objectives. You have to look at, your own firm. You have to look at what point of time you will be satisfied that you have fulfilled your responsibility as the engagement letter which you have issued to the trustee. So filling up those, that I would require certain level of responses from you, so that would help you to actually define what your objectives are. And once you know what the objectives are, you need to assess where the risks are, and that risk assessment process has to be written down, and that risk assessment process will help you to identify any event which can happen, and that can be a very simple event, but that can be very complex because there could be a larger firm, and then you need to document how that complex event would be uh, traveling through to the person who's going to issue the audit report. And it could be all very different, like I said, because each firm is different. Because in some cases, the partners are making the decisions, and depending on the resources, there could be some staff members working from overseas, and the law changes all the time, and if you are a part of a network firm, then the network may have their own rules on what you must follow. And you could be auditing, for example, self-managed super funds, or you could be auditing, let's say, solicitors funds or real estate agents funds. So in all those circumstances, the risk assessment process will have its own functions. Now, each firm has their own operating characteristics. You work in a different manner from other auditors, but then your objectives could be very, very different. You could be using staff, you could be doing all the work yourself. You may use different computers, and some of you may say that with my computer I'll have certain um, email protection because or certain breaches, and some of you might be working on a website, so you will be following that pattern of auditing. So that needs to be again all documented, because that will tell you what is the management of your audit. Now, when you find anything wrong, you need to design and implement responses. So if something, let's say, happens in the independent side of things, so you must have a policy document on how I'm going to resolve that issue, and how quickly I will monitor it, and how quickly I will make changes to my RAP, so that the risk, if it happens again, is controlled in a quicker manner. Now, you have to establish your, like I said, your own policies and procedures where you will identify the risk, and how those risks will be reported, and how the complaints will be resolved, for example. Now, you should, from staff members, make sure that you get letters that they are independent. But at the same time, you must also have a system on how you will identify the accountants, because I was talking to an auditor the other day, and this is a very good example. He said that I got a call from a person who claimed that he's working for an accounting firm, and he wanted some information about one of the funds. And he mentioned his name, he mentioned the firm name, and that firm name was sending him quite a few audits, like over 100 audits. But the auditor had not spoken to this person before. So this person was asking that he has by mistake deleted some of the PDF files. Could you send it to this address, to that email address? And that email address was not, it was a Gmail address, and it was not the email addresses, the domain name which that firm uses. So that was a risk factor, which the auditor picked up. So he then, now I'm getting to the response side of it. He then said, okay, I'll send it to you very soon. And then the auditor called the principal of the accounting firm to verify whether that person really works in that office or not. So the principal of that office said that he's an ex-employee, and if he's asking you to send some information, I'll request you not to send anything to him. But the point here is that the audit firm did not have any procedure in place, and if there was a staff member in place, the staff member would have not known what to do in that particular circumstance. So the point of this quality management system is to explain to all staff members on various situations and identify the various risks which can be faced by the staff member, and then on what to do on certain things. If someone calls you, do not send any document, confirm with me, or send only to those people who are registered email addresses, or certain procedures which you need to follow so that your audit is of some quality. Now, any system which you would put into place would have no meaning unless it's very reliable and it works. So that means that if you have staff members, then you should be making a mystery call to the staff member and checking whether they are following the protocol or not. And if there are any deficiencies in your system, then you need to retrain them. You need to explain them on what the policy says on certain aspects, certain risks. So each and every individual who is working for you should be aware of those policies. And as far as the monitoring activity is concerned, it should be done by a person. Let's say it could be another manager who is fully aware of the systems, so that he can identify where the person has actually breached the quality. Now, I know this policy document could be very extensive and very difficult to fill out, but what I have done in the handout. uh, Now, I must say that if you don't have this policy statement document, you could be in trouble with the tax office. But then, as you can see, that this is a 28-page document which I'm giving to you. There is obviously no fee to it. You can use it, and it's in a Word document format. Uh, you can go through it, and I've tried to highlight uh, certain areas which you need to fill, because you need to put the name of your firm, the address of your firm, whether you are CA, IPA member, and you can delete certain areas, whether you have partners or you don't have partners, what is the structure of the business, what is the history of the firm, and what is the location, what is the risk assessment process, how will you establish the quality objectives. And then I've given you a full on each and every component. There are 5 I've done out of 8, so I'm sure you can do the remainder. on governance and leadership policy. What are the objectives of your firm? Now, please, this is just a template. Don't take it as gospel and don't apply it in the form which I'm giving it to you, but use it candidly and use it to your firm. So what are the quality objectives and what are the risks? So how will you pick up if there is a problem, and what will be the response? What will be the action based on something like this? So let's say there's ethical requirements. I'm just reading one out. So the firm has its personnel understand the relevant ethical requirements of which firm. So that's my objective, and how am I going to achieve that? What is the risks? The firm is, if the firm and its personnel are not aware, or this is the risk, not aware or of or do not understand the relevant ethical requirements of what they are subject. So how will you follow it up? You will identify, evaluate, and address threats, and you will be identifying, communicating, evaluating, reporting all these breaches to the ethical requirement. So you will be filling, and you should refer to those various sections which you will follow in the report. Like for taxation purposes, I've entered things that fail understand the independence obligation of the legislation requirements. So what is the solution to that problem? So you'll go through it, and you will see that some of these things, although you will find them utterly boring and unnecessary, but the auditing standards require you to have this policy document. Let's talk about resources, for example. I'm looking at, so I prepared this, that personals are hired and developed and retained to have competent and capabilities to consistently perform quality engagements. And the risk is that if you're not able to attract, retain, or afford competent personnel, so the solution to that is the firm ensures that sufficient appropriate resources are assigned or made available to the engagement in a timely manner. I know some of you, when I was discussing this with some of the auditors on Tuesday, when the webinar got cancelled, and we were discussing on whether this applies to self-managed super funds auditors or not. We were to the conclusion that most of the auditors work in very small teams, may have or may not even have employees. So in most cases, this is irrelevant. But then the comment which I found to be very, very interesting is that there's a lot of consolidation and retirement happening in this space. And a lot of auditors are actually getting away from this game. And then there are audit firms coming in, and it's not uncommon to see audit firms of the size of 10 plus staff members plus the principals. So this could be a bit important for them to have this quality statement on the ground. So that's about it. Vaibhav, usually I take overtime, but there's nothing much I can talk about, except I would ask everyone to read my presentation, read the manual, and make their own manual. And very importantly, just follow the ATO guideline, the new ATO guideline, which has come from 3rd of July, that they must document each and every, prepare and document an audit plan. So this is something which many people do not do. So just make sure that you are able to retain your license when the tax office comes knocking at your door. Are there any questions, or we can wrap it up if you like?
Hi, Manoj. We've got a couple of questions. Would you like to take them online, or would you want to individually reply to them?
No, we have time.
Yeah. Okay.
I'll try my best. Yeah.
Okay. So the first question is, can we not rely on a software as an expert?
Oh, definitely not, because a software is a program, uh, which has been designed by some IT people who have knowledge of self-managed super funds. And I'm not saying there can be a bug in the software, but it is quite possible because of changes in legislation, the software may not be functioning according to legislation. So it's never a third party. You should be taking independent, all the auditing standards talk about independent review of each and every evidence. So let's say if you get a dividend statement and it has a franked amount, maybe it was an unfranked amount. So the dividend statement which you are receiving could be a PDF, and it was unfranked dividend paid by the company. How would you know whether there is franking available or not? You can't trust the software. You can't trust the piece of paper or PDF given to you. You have to verify that the franking credits are really available to the fund by verifying from the company's website or finding a third party proof that those kind of things are available to the fund.
Okay.
So
Thank you.
definitely not the software, definitely not the software, and definitely not ComSec, because I see this quite often that trustees, sorry, the auditors look at the ComSec or look at, or sometimes they look at, uh, income detail prepared by the software, and they think that's correct, but that's not correct. And sometimes people or auditors will rely on, broker statements. You need to go to the bottom of every transaction. And I'm not saying that you should look at each and every statement. You must have a test case. And for test case, you should look from top to bottom the whole transaction.
Okay.
Yeah, but that should be in your quality statement on how you will audit. Let's say there is a profit on buying and selling of shares, and the share was bought maybe 3 or 4 years back, right? So how would you know what the price was, because you don't have the purchase note? So the software may have some figure. You can't trust the software that that is the purchase price. You need to get the contract note on when the shares were actually purchased. So that's how I will audit.
Okay. The next question we have is, when you find small errors, which is less than 10% accumulated total, and you make
Yeah,
notes, is that enough?
yeah. Look, what is material depends on each and every auditor. Um, the set of accounts are never accurate. They are fair and reasonable presentation of all the transactions. That's if you, let's look at the audit report. I might just download it, and that's what we are supposed to, audit upon. We're not here, we are not appointed, and in fact, all engagement letters, should say that I'm not here to look at frauds or look at errors made. I'm just looking at whether the financial statements, whether there is a material misstatement or not. And if there is no material misstatement, then I'm happy to sign it off that it's okay. But as long as material statements are identified, then you've done your job well. So I'm just looking at the audit report. By the way, I just downloaded it, and it says the 1st of July 24. And let's look at the Part A statement. Yeah. So, in my opinion, the financial report, which should be signed, by the way, in my opinion, the financial report presents fairly in all material respects. So we don't talk about is accurate. We're not saying that it is accurate. It's not accurate. It should not be accurate. There could be always errors in there. And how big an error depends on the auditor to judge. And if there is a material, you can write a note, and then whether to include it in your Part A, whether it is a disclaimer of opinion, whether it is an adverse opinion, or whether it is a qualified opinion. It depends on the judgment of each and every auditor and the size of the fund. Look, if there is $1,000 off in $1 million fund, I won't raise an eyebrow. I mean, that's me. But I'll have a note in my working papers that I choose to ignore it. But I may put it in the management letter that, look, there was an error and I've ignored it. Yeah, that's how I will do it. That's how I will address it. Yeah.
Okay.
Any other questions?
Yes. So what specific training and competency requirements must the audit firm implement for their staff?
Oh, uh, so they want me to tell them who should they employ?
No, how to train the staff members to ensure compliance with
How
AS
to?
1.
Yeah. Look, auditor is person who's above an accountant. So when I had my accounting firm, in those days, internal independence was not such a major issue. And my wife was the accountant. She was managing the accounting side of things. And I was looking after the audit side of things. And we had quite a large number of funds. And I picked the senior most person to be my assistant. So if anybody wants to know, I would say someone who has actually done accounting work for minimum 5 years to 10 years, minimum, I would say. Anyone lower than that, you're not going to get quality work from them, because someone who has 5 years experience. But then you see, each time I conclude that the days of $300 audits are gone, because a 5-year experienced person in today's inflationary wages days could cost you maybe 100,000 or more, or could be $50 or more. So how can if your cost of labor is $50 an hour, how can you complete an audit in $300? It's just amazes me. So if you're an accountant, the more expensive the auditor could possibly mean that there is actual audit happening. And if it is cheaper, then obviously the auditors are taking shortcuts and not actually auditing. It's you're basically paying for a 1-minute job where the auditor is just printing the audit report and giving it to you. They're not auditing. Yeah.
Okay, thank you.
Anything else?
No,
Yeah.
that's about it. I think we can now finish the webinar and edit for everyone.
Yeah.
Thank
And
you,
look,
everyone.
if anyone has concern, they can email me directly, but you must have this policy document before you sign the first audit report. You must prepare that for your firm. And all your professional bodies would also be asking for one, because I'm aware that the Auditing Standards Board is stressing it with chartered accountants and the CPAs that your members don't have one. So this when you come for your quality review, that's the first thing you will be asked. All right. Thank you very much.
Okay, thank you everyone for attending today's webinar. We'll see you in the next one. I'm going to now end the webinar for everyone. Thank you once again.